This is Mike Zuzolo at Global Commodity Analytics in Atchison, Kansas with your weekly grain update for November 20th. The major features to this week's trade has been weather premium being taken out of the corn and wheat, and at the same time, demand premium has been pulled out of the soy complex. Thus, heading into Thursday's weekly export sales report, the market was very on edge regarding demand, and this week's numbers did have the demand bull breathing a sigh of relief, I suspect. For soy, while soybeans saw a marketing year low of only 17 million bushels of new sales, the product market saw a nice jump. Meal export sales were 2.5 times the highest trade guess, and soy oil saw a 40% jump over its 4-week average. To me, it's now up to the technicals to stimulate short covering. An important level, for instance, in the Deese meal, around $375 a ton. A close back above this level, I would imagine, would bring with it some nice buy stops. As for the feed grain technicals, I found it especially noteworthy that both lead month corn and lead month wheat fell back to test their 100-day moving averages. Both of those moving averages have held at this point. So heading into next week's trade, I expect the charts to take precedence. And with export demand for wheat and corn, plus the news that the upper Mississippi River near Minneapolis-St. Paul will be closing on the 20th due to ice, which is a closing the earliest on record, I'd also suspect the cash market in the United States would start to find some buying interest by end users. South American crop conditions remain less than ideal as well. So if the soy complex doesn't collapse, technically heading into the end of the week, I think there's a pretty fair chance that the wheat and corn have probably found equilibrium in the near term. Also key is the meal again. The importance of the meal price can't be understated if you ask me. Until next time, this is Mike Zuzolo.